So welcome back to my channel. Please remember to like and subscribe to this channel. Like this video and subscribe to my channel. In this video I'll talk about depreciation. What is depreciation? Depreciation. Okay, so depreciation in simple terms is the loss in value of your asset. What kind of asset? A fixed asset. What is a fixed asset? It is an asset that you have for more than what? For more than 12 months or for more than a year. Right. So before we go deep, let's look at some of the terms used. Okay. So as we said, depreciation is the systematic allocation of the cost of an asset, of a tangible fixed asset, over its useful life. Okay, so a physical asset, so the loss in value of an asset. When you buy a motor vehicle, and your basis of accounting is accrual, how do you show the cost of that motor vehicle? You don't put the whole cost of that asset in one financial year, but you allocate the cost annually to that of that asset. So what are the key terms we need to know? So one is the cost of an asset. So whatever how much money you have spent on that asset, so that is your cost. So it includes the purchase price, shipping and installation costs, and also if you have other taxes or other costs. Okay, and then we have the useful life. So useful life is the life you expect to use the asset. For instance, if you buy the motor vehicle or you buy another asset like machinery and you expect to use it for 3 years, so 3 years is your useful life. So it's the estimated period over which the asset will be used by the business. And then we have the residual value. So this is the estimated value of your asset at the end of the useful life. For instance, at the end of 3 years, you expect to sell your machinery for, let's say, $3,000. So your residual value, your residual or scrap value or salvage value, is the expected value of the asset at the end of its useful life. Yes, we know that we have depreciated this asset fully, but at the end of that useful life, how much will that asset be worth? Okay, so it will be, let's say, worth $5,000. So that is your residual value. And then you have the depreciation expense. So how much of your asset are you depreciating, or how much of your asset is the asset losing value every year? So this is the portion which goes to the income statement, or the statement of financial, or the statement of profit and loss. Okay, so it is the portion of the assets cost allocated as an expense in each accounting period. Okay, we'll look at that in an example. And then we have accumulated depreciation. If you have an asset whose useful life is 4 years, so let's say we're in year 3, what is the accumulated depreciation? So it is the depreciation for all the years to the point you are looking at. So for instance, if you are at the end of year 3, so at the end of that year 3, you add the depreciation for year 1, depreciation for year 2, and then depreciation for year 3. So that one will give you accumulated depreciation. So accumulated depreciation. So this is the total depreciation recorded on the asset since it was purchased. Okay. For instance, after 3 years, accumulated depreciation will be 9,000. For it, if annual depreciation is 3,000, right? And then let's look at the net book value. So the net book value is the value of an asset you will find in your books after deducting depreciation. For instance, if you are in year 4, the asset was bought for 100,000 and its annual depreciation is 25,000. So at the end of year, let's say at the end of year 3, we will have depreciated by 75,000 and the cost of that asset is 100,000. And then the difference between the cost of that asset and the accumulated depreciation is what gives you what? The net book value. So the net book value is the asset's value shown in the books, and it is calculated as net book value equals cost of asset minus accumulated what? Depreciation. Alright. So there are so many ways of calculating depreciation, and one of the simple ways is the straight line depreciation. So under the straight line depreciation, each year you allocate an equal amount of depreciation up to the end of its useful life. So we have straight line depreciation. So it spreads the cost of the asset equally over each year of its useful life. Okay. So what is the formula for calculating the annual depreciation? So it is simple. Cost of an asset minus a residual value over useful life. Okay. So here is an example. A company purchases a printing machine for 50,000. The machine has an estimated useful life of 10 years and a residual value or scrap value of 5,000 at the end of its useful life. Using the straight line method of depreciation, calculate the annual depreciation expense. Prepare a 10-year depreciation schedule. Determine the net book value of an asset at the end of each year. Alright. So depreciation equals what is the cost of an asset. The cost of an asset is, so we are using this formula. So what is the cost of an asset? Is 50,000. So we'll say 50,000. That's the cost of the asset. Just a minute. Okay, that's the cost of an asset. The residual value, what's the residual value at the end of the 10 years time? It'll be what? It'll be 5,000. All right. And then what's the estimated useful life? It will be there for how many? For how many years? 10. Okay. So let's calculate the annual depreciation. So each year in the profit and loss, we'll say equals, open brackets, 50,000. Or I just get the, okay, yeah, let me just hard code them. 50,000 minus 5,000 close bracket. So 5,000 is the what? Is the residual value. Divide by the useful life. So useful life is 10. So I divide by what? 10. So each year depreciation is what? Is 4,500. So let's look at the cost. Okay, year 1. Okay, at the beginning of year 1, the value was what? 50,000. Okay? And then during the year there is depreciation of 4,500. Okay, so cost, depreciation, then we have net book value. That's year 2. No, year 1. We're still in year 1. Okay, so the net book value will be the cost minus the depreciation to give us what? This net book value. So that's year 1. Okay, so at the end of year 2, at the end of year 2, the cost is still 50,000. The depreciation is still what? Depreciation is still 4,500. Okay, but now to find the net book value, it will be the cost minus, open brackets, the cost, it will be the cost, this cost, minus depreciation times 2. That is the accumulated depreciation. So at the end of year 2, the net book value will be what? Will be 41,000. And accumulated depreciation is what? 9,000. So it will go on and on until we reach what? We reach at the end of year 10. Alright, so the calculation will just go like that. Right, so this is how you calculate depreciation, net book value, and accumulated depreciation. So thank you, and please like this video and subscribe to my channel. Thank you. Bye bye.